Jonathan Barratt, he is joining us live from our Sydney CBD studios, and he's from Commodity Broking Services in Sydney. So, Jono, just to pick up the conversation there, how closely are you watching out for these HSBC, the flash PMI data from China?
Oh, look, Nadine, very closely. I think it's one of the key bits of data that we need to either suggest that things are actually working in terms of their slowdowns, or whether or not the market is ignoring what the central bank is doing and just continuing to buy. So it's another piece of the puzzle which we're going to keep keenly watch to really see whether or not that slowdown is in fact taking effect.
And what do you make of what Carson was just speaking of, that there is now being the possibility of interest rate cuts in China thrown out there?
Look, I don't know. I think I'd probably say that the rumours of that's what they are. The central bank doesn't come out with statements and change some of their policies without really thinking about it. I've just been up in the region having a bit of a look around to see what's actually happening, and everything is still go, go, go. When you look at the amount of money that's sort of going into infrastructure and building, it just appears that people are ignoring what the central bank are actually trying to achieve and are continuing to prosper and grow.
Well, it's hard to stop a runaway train, I suppose. So confident then that China will be able to negotiate this so-called soft landing?
Yeah, I'd agree with that. I think that they've always managed to control it. So I'm actually feeling that they can. They've just implemented some new policy in terms of restrictions on housing in second-tier cities. So I think that's another exercise to actually try and slow down the economy.
Jonathan, we've been hearing just recently that Germany and France have reached a joint position on a new bailout plan for Greece that will include some participation of the banking sector. Now, this is according to sources speaking to Reuters. This is what the market has been hoping for, some sort of significant progress on this whole question over Greece and the risk of contagion across the European region. But what will sort of a significant move towards resolution there have on the price of gold, do you think? Because it's obviously been a big beneficiary of all the uncertainty out there.
Oh, look, it has been. I mean, when you look at it, I think in everyone's mind there was never a doubt that they'd come through with something. It's just an integral part of the survival to the euro. So I guess that we had those signs of an issue occurring. Gold actually traded higher. It is interesting, though, that the gold is still at around 1,600 when that news is coming out. Perhaps the market hasn't woken up to it, or perhaps they feel there's still more concern. So I think the market will be waiting to see whether or not there is a possibility that this resolution or this plan will actually work. And if it does do, then you perhaps might find gold come under a little bit of pressure as a result of that. So, I mean, we saw gold sort of dip down yesterday, down about $15. So if we do see some sign that, that this will be some form of resolution, then you might see a little bit more profit taking on the precious metal.
But if we do see profit taking, will it be sort of a blip on the long road higher for gold?
Oh, look, I don't think so, no. Not at the moment, anyway. I think one of the interesting things about the rally that we've seen is that we've had these contagion concerns and debt concerns, but more importantly, the supply of metal to the market has been such that it has been continually coming off. Just in the last quarter, supply to the market was down about 4%. So that's actually aided the move higher. So I think whilst we see ourselves through these troubled times, we might get dips, but I think those dips are going to be certainly well supported. And if you do see them, even if it's back to 1580 or even 1540, then I still think that represents a good opportunity to buy. I think the bull rally in gold is still not over yet. We've still got concerns, and I think that'll keep the market well priced.
How is that supply side affecting silver?
Silver is actually slightly different. Silver, in fact, had an extremely volatile night last night. Supply is there, but we've also seen a massive increase in the demand for silver from an industrial perspective. So silver actually benefits, I think, from any form of risk aversion trade through to economic growth phase. So I think silver in itself, to me, is a standout. Remember, silver hasn't reached a record high yet. It's still close to about 10 cents off that record high. So if anything, I think silver is one thing I'd probably weight a little bit more into in terms of my portfolios.
Let's talk about oil, because of course we do have the northern hemisphere summer ongoing, the driving season as it's often called. Is that sort of living up to expectations? Because there has been some talk of people, not hitting the roads.
Well, it has. This is the interesting thing, because when you look at refiner capacity, that's trading on an 11-month high. So the refiners are certainly pumping out as much as they can. And last night we actually saw a draw in inventory. So I think the summer drive time is actually panning out to be quite positive, and that consumption of oil is keeping the prices pretty much well behaved. In fact, I think we are soon to test back through that US $100 a barrel. I think the key is whether or not it'll head above that, but I think the expectations are, given the draws we're seeing, that that's a high probability.
And when do you think that that might happen, seeing oil above that $100 US barrel mark? Because then that in turn weighs on the economic recovery in the United States, of course.
Yeah, I actually feel that it's time to actually visit the top side over the next couple of weeks. I think you'll see that renewed optimism out of Europe. You see that renewed optimism once the US administration gets over their debt concerns, or Barratt can solve it. So you might get a level of optimism creeping through the market that will just suggest that, hey, we're going to see some economic growth as a result of these concerns, so therefore the demand of crude should be a lot higher. So I think the market will try and factor that in, and as a result of that, we'll see it gravitate over US $100 a barrel.
I'm just curious to get your thoughts on some of these production reports that we've been getting coming out. Just this morning, we're getting Newcrest Mining saying that June quarter gold production is up, I think, as much as 16%. So this is all looking, quarter on quarter, I should specify. So this is all looking very good for the likes of Newcrest with this gold price on the way up.
Oh, look, it is. I mean, when you look at where and how Newcrest actually work within their books in terms of their hedging, it should be a positive for the price. I mean, there's one interesting thing to note with a lot of the production reports. You know, they're all very positive. BHP's production numbers, all very good last night, obviously except for coal. But when you look at this must return back to the PEs for these stocks, and I think some of them are starting to stand out to be actually very good buys. We certainly weighed into the market a couple of days ago on BHP ahead of these things, these production reports, and obviously their annual numbers. But I think some of these are starting to actually look quite respectable in terms of buying opportunities.
And when we look forward to earnings season here, which, you know, the clock's ticking on it, I guess, really, what are you sort of expecting? What are you going to be looking for when it comes to these resource plays?
Yeah, I think in Australia it's going to be a mixed bag, I'm afraid. I think obviously the mining sector seems to be okay, but obviously the retail sector and some of the industrial sectors I don't think are going to be as strong as what people have expected. I think that the market might get a sense of euphoria perhaps from the States, and that might breathe into our market. And but I do feel that overall that our market is perhaps on a low of some importance, and probably suggests that these earnings will prove that our economy is not as bad as what we first thought.
Jonathan Barratt, thanks so much for joining us. We appreciate your time as always.